All right, it's the 19th of September 2024. We're about 15 plus minutes to the New York Open. Let's get straight to the charts and do our analysis. Okay, so this is the daily chart. Um, we still don't have clear weekly resistance. That's the weekly time frame. We had the previous week closed a strong bull candle above 2530 and above 2550, right? So price is pushing up. We have a lot of bullish momentum on the high time frame. Yeah. So let's go down to the daily. So the daily, this is what it looks like. Yesterday we had the FOMC interest rate decision, and we had the speech just after that. Um, So what price did was basically it kind of whipsawed between 2,600 and 2,550. That's a 500 pip move, right? So it just kind of whipsawed. So it went up, touched to 2,600, came right down, and now is pushing back to 2,600. So it's very likely we get a retest of 2,600 today, right? So that's all that happened. It's just price just whipsawed between uh, within this 500 pip range, right? Up, touched it, came down, touched it, and went back up again. Okay. This happened. I didn't trade. This was outside my trading hours, so I didn't trade the interest rate decision. So let's just go to the H4 and then draw our zones for today. Today we have, yeah. So this is. So before I get to today's news, today on the daily we still have this resistance level at 2582. That's a daily SR level 2582. There's nothing above that, and the closest one below is around 2450, right? So we don't need to worry about the one below because that's very far from current price. Okay. But the levels that we can consider are 2600 and this 2582 level probably right now on the daily time frame. Let's go directly to the H4 and let's do our zones. Let's get rid of all of that, of what we had yesterday. Let's get rid of all of this, that, 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 and get rid of that. Okay, and get rid of that. Okay, so um, let's get rid of this. That's very far away. Okay, okay, so that's a clean chart on the H4. Okay, so on the H4, we have demand here. We have a drop, a base, and a rally there. Okay, um, we had supply here. Yesterday we had supply. Um, yeah, so price did create um, this supply zone there, right? Yesterday it created it, but then price just wicked right through it during news. Okay, so in news these zones generally kind of don't always hold because they all, also because this was a tested zone. This was heavily tested. I spoke about this yesterday. It was tested the day before yesterday, then it came back and tested it. So it was tested the day before yesterday twice, right? You can see that that zone was, that was the kind of zone there. We had drawn this yesterday. um, okay, so it was tested there, then came back and tested it again. So it was tested several times. So price just wicked right through that and went straight to grab liquidity from 2,600. That's a place where price has never been before in the history of gold. So as I said, I think last week I took a trade at 2550 when price touched to, was it 2550? Yeah, when it touched 2550, I took a little trade here. I took a small trade here because we can anticipate um, at these levels when they come there for the first time. We can anticipate some sort of a reaction when price comes there for the first time, right? It doesn't happen always, but if it visits that area for the first time, then yes, we can expect some reaction. And that's exactly what happened yesterday. The price came there to 2600 and it rejected it heavily all the way down to 2550. Okay, so the price is broken through these zones, so we don't have these zones anymore. Now on the H4 for supply, we don't really have a clear H4 supply, so we have to go down to because we have a reaction, we have a rejection here, but we can't see that clearly on the H4 because there is no rally, there is no base, there is no drop, there is none of that. On the H4 is just one H4 candle, one bearish candle. So we got to go down to the H1 and check if it's there on the H1. On the H1, yes, we can. Um, we have a huge huge wick there, right? That's what it looks like on the H1. Now yeah, so we would have like a drop. These would be basing candles and then a drop below, right? But since price is deep within it, now price can react anywhere inside this, okay? So I want to just go down. I generally don't do this, but I want to go down to the M30 and see where we are. Yeah, that's better. That's better, right, on the M30. Unfortunately, we have to go down. I have to go down to the M30 to be able to draw a cleaner zone there. And price has tapped it right now. It's already tapped it. That's the M30 candle, right? That created the drop. So there is resistance there. There is a supply right up there, and price has touched it uh, during the London session and has reacted to it already. Okay, you got to keep that in mind. Um, yeah, so that's about it. There's nothing above that. There's absolutely nothing above that because we are at all-time highs already. So that's below. Um, yeah, that's below, and yeah, that's all there is. It's very ugly, but that's all there is for today, for the New York session today. That's all the zones that we have to trade from. Okay, so let's put these digits down. That's 847, and that low is 686. 847, 686. Then we go down to the M30, and the open here is 444, and the high is 016, 016, and 444. Okay, right. So that's what we got. That's all we have right now. Now, in terms of a high liquidity zone, um, this zone here did take out that, right? It did take out this. So if you go down to the H1 now, since we have drawn a zone there, um, it did take out that demand there. We had this demand drawn earlier, and price did wicket, and this low was taken out by this move down. So that is a high liquidity zone. Okay, that's how I identify a high liquidity zone. It has to have taken out a opposing zone. So we had this zone earlier. This broke through it. Then this low was a significant or an important low, which was taken out by this move down. So that becomes important, right? This becomes a high liquidity zone. Okay. Um, this one, I have to go down to the H1 to see if it did take out anything. Um, Not really, because this was this wick that did take that out. This move up took out all of that. and then push right down. So I will not mark this as a high liquidity zone, even though there is a possibility of taking a trade here because we've got 2550 here. It's a psychological number, so there is a possibility of taking a trade here, but I'm not going to mark that as a zone, because to me, this, if this push takes out this high, then this becomes a high liquidity zone, and I would even then move my zone even up there, right? I would potentially move it up there, but that's not happened yet. So this is current H4 demand, and that is whatever that's left of that H4 supply, right? Um, yeah, I'm going to just mark this, but obviously it's for the future. It's price is not going to be coming there anywhere near that today. This is my area of interest for today. This is my area of interest for the next 2 hours, and then depending on how the 4-hour candle closes, I will, if I'm trading after the 4-hour candle closes, then I might redraw the zones, and if I'm here during that time, then I'll show you guys how I do that. Okay, so for now, this is where, this is what I this is my high liquidity zone area. Okay, so right, so when price is at all-time highs, there is not really you won't find much structure. So there isn't a lot that you can do, right? When when price is making all-time highs like this. So this is an area of interest because it did take out this push down. As I said, we wicked. We did create on the M30. We created, some sort of a supply there. You can see a rally and a drop, a huge drop right from that point. A 475 pip drop, right? So we have some sort of supply up there. Price has reacted to it already once, has already tested it once and has reacted to it, has dropped, did react to it and dropped 100 pips, right? Um, so that is an area of interest for me, and the reason for that is it did take out this H4 low, right? So we had um, H4, we have H4 support there. It took out those H4 supports. We had H4 demand here. It took all of that out, and it went straight to 2550. We even had H4 demand here. If you watch the previous, if you watched last Friday's, I think if you watch last Friday's session, live session, you would have seen that we had drawn, H4 demand right here. This tested that, this took out that demand, right? So that is the reason we're drawing that up there, because this H4 demand is rally, base, and rally, base, rally, right? So leg in, base in candle because there is more wick in this candle than body. If you look at Friday's session, you'll see how we drew this very clearly. We have a rally, or we have a leg in, we have a base in candle because base in handle candle has more wick than body. You can even consider this entire thing as the base, right? You can even consider, because all of those are base in candles, and then the leg out. So price tapped into that, and this move down broke that demand. So because this demand was engulfed by this candle, that's the reason we marked that as a high liquidity zone. Okay, and we wait there for a trade, a possible trade setup. Okay, so so let's just look at today's analysis, what I post in the group. Okay, so if you are trading the signals of the indicator, this is what you should be looking to do. So the analysis previous daily rejected 2600 and closed above 2550. Okay, so we have like a range between this 500 pip range on the high time frame. Price has already tested supply once. Okay, there is daily SR below current price, but there is nothing above it because we're at all-time highs. For sells, I'll either wait for a sell signal from supply, so wait for a sell signal somewhere here. If you are trading the signals, buy sell signals of the indicators, it can be an M15 or M30 sell signal from here, okay? Or wait for price to create a new low, wait for price to come down, create a new low in the NY session, pull back, create M30 resistance, and then a sell signal to retest that new low, okay? So wait for price to create, it's either one of these two scenarios. You either wait for a M15 or M30 sell signal here, or you wait for price to pull down, create a new low, pull back up, create M30 resistance, and then a sell signal to retest that low, okay, to come down and retest that low. For buys, wait for a buy signal, you wait for a buy signal from demand, or wait for price to pull back, come down, create support somewhere around the EMAs or below the EMAs, create M30 support, and then a buy signal to retest the London high, which is that. Okay, that's the London high. That's around 2595, around 2594, 2595. Okay, that is the um, the execution. That's the analysis and execution. If you were trading the buy or sell signals of the indicator. Okay, the indicator, a link to the indicator is available below the video. If you're interested in it. Okay, now we have unemployment claims news today, right? In about 30 minutes from now. So I will wait to trade after unemployment claims news. I don't want to take a trade before that, right? Because we don't know what can happen to price, right? During news, I never trade, I never trade during news. While news is happening, I don't open any trades, and I don't trade 15 to 30 minutes before news either. Okay, so we have news now. So New York session has just opened, so that is the vertical line signifies, the vertical line shows that, this is the New York Open, and I look to take trades on the M15 time frame. So that's the first M15 candle. So when the next candle closes, that will be the news release. Okay, so I wait for at least another 15 minutes, at least a minimum another 15 minutes to look for a setup, right? It could be even longer. It could be 15, 30, 45 minutes, or even an hour later. I'll need to wait to get my setup. Okay, so I'm looking for a potential sell here. I'm looking for a potential sell here. That's what I'm looking for. Okay, a potential sell trade here. Okay, we'll discuss that a little bit later. But now this is what we have. Okay, so okay, so this is what we've got now. We've got this supply here, got demand here. If we go down to the H1, there are demand levels here, right? There is H1 demand there, but I'm not going to draw them because the zones that I draw are based on always on the they need to look like demand or supply on H4. They need to look like it. Not, it doesn't have to be um, very visible, but it needs to look like it. So for on H4, I don't see anything there, right? It's just a straight candle. But on here, I do see a rejection on the H4 there. So that is the reason why I went down to the H1 and then the M30 to draw it, because it looks like there is supply there. There's a rally and there's a huge drop, but all of that, the rally and the drop, all of it happened on one single H4 candle, because it's a news candle. That H4 is a news candle, right? So if this wasn't a news candle, then maybe this rally and this drop may have taken 2 or 3 candles, and we would have had a clear supply zone there on the H4. But but because it happened during news, it happened on one H4 candle, so we just have a wick, a big rejection wick there. So we had to go down to the H1 or the M30 to be able to refine it, right? But we know that there is some sort of supply there. Now here on the H4, I don't see um, any demand there, right? So on the H4, H1, obviously there is one there, there is one, there is one there, and there is one there. Okay, okay, there is one there. But on the H4, none of those are visible, right? So because they're not visible, I will delete all of them, right? But here I do see one. Now this base here is quite significant, because when price comes back to that area, which is around here, um, when price comes to this area, it could possibly do the exact same thing. It would range. So we got to be careful when price comes around here, uh, to kind of expect something like this. Price to range like it did down here on this side, it could range here as well, because price generally mirrors what's on the left. Okay, so we could expect this kind of a, at least some sort of a range, 1 or 2 candles here when price comes to this area. So you just got to keep that in mind. Now let's go down to the M15. We've got another 20 minutes for news. um, Now this candle, this M15, let's just move this a bit across. This M15 candle here was the candle that reacted to this liquidity area. I call this a liquidity area because price came to it for the first time ever in history, 2600. Okay, so as I said before, when price comes to these areas for the first time, you can expect some sort of reaction. Yesterday, the reaction was a 475 pip or a 500 pip reaction because of news, right? So generally, if there was no news, maybe the reaction wouldn't have been um, this much, right? It may have been a smaller reaction, but because of news, we had a huge reaction here of about 500 plus pips from that area. So now this is the M15 candle that caused that. Let's just go down. I just want to see what it looked like on the M5 and the M1 as well. Um, yeah, we do have rejection there. I don't like it too much, though it is an engulfing candle. It didn't, there is no little or no wick at the top. And if you go to the M1, yeah, okay, that candle is a little better. That candle is a little better. We had a bit of a stop there on the M1, and the next candle was a strong bearish candle, and then just price just couldn't come up there again, right? It just failed to come back up to that candle again. Okay, so this candle is kind of very important. This M1 candle price failed to come back up there. Okay, so let's just want to mark the middle of that candle. um, just want to mark this. It's not that I'm going to use this, I just want to know where price could come to. Now go back to the M15. um, Okay, 016884 4016. Okay, so that's price did touch that sniper level. It did touch it here. Now let's get rid of that line. It did touch that already, and we dropped. But that's a very big stop loss. If that trade happened in the New York session, I wouldn't have taken that trade because that stop loss is way too much for me. Now I want to see price come above this. I want to see price come above this, right? And get a reaction somewhere there with a tighter stop loss, 20, 25 pip stop loss, a tighter stop loss, get a somewhere reaction somewhere there, and that area lines exactly with that M1 candle. Um, just go back to the M5. Yeah, we broke this side, broke this candle, broke this side, and then we dropped. Yeah, so yeah, somewhere there, if I would go down, 619. Yeah, let's see if price can get up there. Let's see. If it does, that'll be a place that I'd be willing to take a trade from right there. But let's see how the M15 candles close. Now, price might not because it's already reacted there. But um, even if it's not going to come up there, I wouldn't have taken a trade here. This wasn't my trading hours. I wasn't here. I don't trade the London session, so I wouldn't have been here at the charts when this happened. Right, this drop happened right here. I wouldn't have been at the charts. And secondly, this is too much of a stop loss for me. I'm not going to take a 50 plus 50 pip stop loss, right? So I want to see if price is going to come back here again. If it does come here to this kind of area, then maybe I might be interested. But other than that, I'm not going to try to sell here anywhere here. Um, in terms of buying, price can react um, to these EMAs, right? Because we have the the fast uh, the fast EMA has already crossed the slow EMA here. So price is above the EMA, so we could have a pullback here, somewhere here, aligning perfectly this with this with this area of the fib, with this value of the fib, and then continue to push up, right? But just want to see if I have anything there. Well, price straight up there. 482. Slow is 709. So this drop base rally broke through all of that, broke through those H4 highs, right? This drop base rally broke through all of those H4 previous H4 supply zones. That broke through all of that H4 supply. Now, if price comes there, if price comes there, I want to see what it does. I'm going to mark it and I'm going to leave it. I may not take a trade out of it, but I want to see how price reacts to it. The reason price went up and came right down is because of news, right? Otherwise, if there was no news, price would have come, reacted here, some sort of reaction, and then pushed up, because this zone, if you go now on the H4, there is supply, clear supply here. We have drawn this yesterday very clearly, and price broke through that. And this was the cause of the break, right? It's not visible clearly on the H4 because of this big wick. But if you go down to the H1, you can see this move up, this drop base rally is what broke all of that. If you disregard, if you ignore the drop after that, right? If you ignore the news drop after that, this drop base in candles and the rally is what broke all those H4 supply or the H4 resistance to the left. This move up. It's very clear on the M30, right? If there was no news, then price would have reacted here. So now price has gone straight through that without reacting to it at all. Came back close to it, kind of rejected, came down, broke again, tested it here, tested it here a little bit, and went up again. Okay, so I want to see what price would do when it comes back here. If this area, that area lines up with the area that I spoke about, it's the same area. It's exactly that noise or the range or the so price could mirror that. When it comes here, we could have some sort of reaction before we continue to either go up or down. So I want to that area is of interest to me, so I'm going to mark that area, leave it on the chart. I may or may not take a trade from there, but I do want to keep that in mind, and I do want to mark it as a high liquidity zone because it did that thing. Now it's broken right through, so I'm not looking to maybe not call it a high liquidity zone because price ran right through it, right? Then came back, ran again right above it, and it also aligns with this. Um, with a rally, base, rally, right? There is um, a rally here on the M30, two basing candles, and then two leg out candles, which is really nice. I like to see two same color candles going out, right? Um, Even this is nice. All of base and two same color candles kind of going out. And on the H1 is also very clear. You have a base there, a rally, two base in candles, and then the leg out. Then you have a base, a rally, a base, and the leg out, right? So that area is significant for various reasons. For what I just said here, then here I have a base there. I have some sort of demand, H1 demand zone, and also I have the EMAs all aligning in that area. So I'm going to mark that area, and I'm going to see how price reacts. If price gets there within the next 3 hours, if price gets there, I'm going to see what price does. And depending on that, I may or may not take a trade from there. Um, Now price is just here. So I'm not going to be looking to trade anywhere here in this range, in this 200 pip range. I'm not looking to take any trades unless price comes to my extremes. I trade, as I said, I've said this several times, I look for opportunities at the extremes. That's an extreme. That's an extreme. From where price is standing right now, this is an extreme, this is an extreme. So, and this is an extreme. So I'm looking at these areas here, here, possibly here to take a trade from, right? I'm not going to trade anywhere in this space. I'm not going to trade anywhere in this space, right? 200 pip range, I'm not trading in this 200 pip range. Inside this, I want the extremes. To me, I believe personally that at the extremes is where I will get a um, low risk, high probability, high RR trade, right? At the extremes. Um, yeah. So even yesterday, soon after I closed the stream, price had come. If you look at if you watch yesterday's stream, uh, the last um, the last 30 minutes of yesterday's stream, you'll see that I had marked a zone, an H4 zone there, in that area there, H4 zone there. It was clear on the H1. I think we did it on the H1. There was a zone somewhere there. Yeah, that zone there. And price did come there. And if you go down to the M15, price did come there, and I got some pips. Price I got with a very tight stop loss. That's the reason for this very small 0.48% gain, is because of that. Now I didn't let it run because obviously, um, uh, as I said yesterday, I said this several times yesterday. The price was ranging, was anticipating it to range before news, right? So I was not going to hold it. I was going to close it within about 20 minutes. I was going to close the trade, but I wanted to see. I took a very low risk trade, and that's where I took it. You know, that's where I took the trade. So when these candles came down, the zone was a little lower than this. Obviously, it wasn't here. It was much lower here. Um, I think this is what it looked like. I have it on the, yeah. So that's how it looked like yesterday. That's what that zone looked like. If you look on the H4 time frame, that's what it looked like. Um, it was there. That half of that at the midpoint of that green candle, right? It's just, yeah, you can see there right at you have this red candle here, and the midpoint, lesser than the midpoint, maybe 1/3 of that the candle body, that was the zone, a high liquidity zone. I had marked it at high liquidity and H4 demand. I was looking for either trade from here. I said this several times yesterday before the session started. I'm looking for a sell trade here, and a buy trade either here or here, right? So this is where I was looking for a buy trade, and that's exactly where I did get my buy trade, but it was just after the session closed. I ended the session. It was there at that midpoint there, somewhere there. And if you go down to the M15, yeah, so this candle, so my stop loss was about 10 pips, and then I got out at about 2 RR, I think, right? It ran about 50 odd pips. Obviously, I was not going to hold it because you know, I was anticipating price to range, and that's exactly what it did. It came back there, it still held it here, it ranged, then went up, then it broke it, right? Later it broke it, later on it broke it. But I got about 2 RR there. I took a very little risk, and I got about 2 RR there. Now we are at news in 40 seconds, so let's see what price does here. If it's gonna come up there, um, yeah, if it does come up there, then we'll see. Um, price might just drop here, and if that happens, then because we've already touched this, so we might just here we might just touch it, and yeah, we dropped it. We just dropped, boom, drop right there. We didn't even come back. This candle even didn't come back here. Otherwise, I would have maybe taken a trade there, but it didn't. Drop straight down. Just has no wick, no top wick. Drop straight down. It might come further down. Let's see if it moves down. Then I will keep an eye on this green area that I marked here. I'm going to keep an eye here on this. Yeah, that high was 129, 888, 129. Yeah. Yeah, we're gonna wait. We're gonna wait and see how price reacts. Now we're gonna re-look at this area a little bit. So, this thoroughly. Price is falling. I would have considered a trade here. I would have considered trade here. Very low risk if price did come to that level, 2590.69. with a very tight stop loss, only because we've already tested supply, right? We've already tested it. So if it's already tested, there is a 50% chance that price may or may not come back to retest it. Maybe it's grabbed enough liquidity to make the move down. So it doesn't need to come back up here again. It might not need to. So then um, that to me becomes the candle that I draw the fib on, because um, this candle broke this high, this candle broke this high, and this is the candle just prior to news. So I draw the fib there, and generally, if it's not a very important news event, you just get a touch there, and then bam, you drop, right? So it didn't come there. So now that's I'm not going to take it the second time, because it's the first move. If it came there, touched it, and went, then I'll take the trade and close it. But we're going to wait for this candle to close. I'm not going to do anything right now, because that news move already happened. Uh, if it happened here, if it touched it and then happened, great. I may have taken a very small position there, even though I don't trade news. Not usually. I I, I don't trade news. But this news event, this unemployment claims, is a very insignificant news event. It doesn't do much. It doesn't do much. The news events that I do consider are NFP, CPI, retail sales, PPI. These are the big news events, and then obviously the interest rate decision, FOMC, the meeting, the interest rate decision, and then the meeting. Those are the main news events that I consider that are very important, that will move price significantly. And when I say move price significantly, what it does is it just breaks through levels, breaks through zones, right? Like you can see, it just is a huge move, breaking through zones to grab liquidity to continue. Now we are coming down, right? Unfortunately, they didn't tap that area that I wanted to, but we are coming down. So I'm going to pay attention to this. It's unlikely now that price is going to come up here. That's not going to happen. Okay. Because price is now not, it's already, that was the liquidity grab there. So if you go here in the London session and look at the M1 time frame, you will see what I mean by liquidity grab. Your price is just falling now. There was no chance. Um, it didn't even come here, and it didn't even come to that area to get a trade. So that's fine. Look at that. That's a liquidity grab from the zone. That's the only candle with a big wick that touched the zone. No other candle, right? That's a bullish candle, right? Grabbed a little bit liquidity, but that's the big candle. That's the engulfing candle, the 1 minute engulfing candle. If you go down to the M5, it shows as a big candle, right? 47 pip candle, touched, came down. That was the liquidity grab. That big wick. When you see these big wicks, those are liquidity grabs. That's a 27 pip wick. Grab liquidity from that zone, and now we're pushing down, right? So we're pushing down 100, and now we've moved down 126 pips. But the move started in the London session, so I wasn't a part of that move. Um, yeah, so we gotta wait now. We delete that. And also, what price did was, it came here to that sniper entry perfectly, touched it to the pip of that candle, the sniper entry of that candle, M15 candle, touched it, came down, pulled back up to the mid level of the fib, and that's where you got the reaction. Now we're coming down. Now we're going to get some sort of a reaction here at this fib level here, right? This is also the 3RR level of that trade. So if that trade happened in NY session, if If I was a part of the trade, then that's a 3 RR level, 160 pips with the 56 pip stop loss. Obviously, that stop loss is too much for me, but you get the idea. That's the 3 RR level. So when we come here, that's the next place price is going to come down to. We're going to get some sort of reaction there. And below that is this green area that I have marked. It's aligning with the EMAs, and I'm going to watch that area to see if there's going to be some sort of a reaction there. And I'm going to wait and see how the M15 candles close in that green zone. Okay, we've got 15 minutes. We've got about 6 minutes for the candle to close. I'll be back in a few minutes. Okay. All right. So 15-minute closed a strong bearish candle, and we are coming down lower. So now 12 minutes for the 4-hour candle to close. So let's see what price does here. Yeah, I think we're gonna continue down. Yeah, we got some support here, right? We've got support there. Price is very likely going to come down there. So we're going to wait. We're going to wait. It's about 100 pips away. We're going to see what price does when it comes there. Yeah. Price is very likely going to come to this area. Yeah, we're going to come here. Yeah. Yeah, that's where we're coming to. So that's another 70 pips away. It's very likely we come there. This is a reaction to the EMA, right to the tip. Usually this happens when price moves very much away from the EMA and then comes back to it. You do get a reaction from either one of the two EMAs. If you don't get a reaction there, then it's very likely that you'll get a reaction at the next one, right? It's these two EMAs. These EMAs are all part of the indicator that I use. I'm not using the buy or sell signals of the indicator here, but all these lines that you see, these numbers, the psychological numbers, all of that are part of the indicator. The session hours I trade within these two vertical lines, that's all a part of the indicator. You can see the reaction here, the M1 candle. That was a bit of a liquidity grab there. From that, we may push up a little bit here before continuing down. That was a very nice touch there. Perfect. Right, 259483 to the pip, touched, dropped, but in the London session, not when I trade. 207 pip drop. Very nice. That's why these candles are so important. These M15 candles from liquidity areas are so important because price comes back to that candle. Yeah, we're pushing down. So this is the next M15 candle. We're continuing down right from that 258950, the mid of the fib, the New York session. We came, we pushed. This is the New York move. Uh, yeah, and then about 30 minutes from now, we have the New York Stock Exchange open. About 35 minutes from now. So then we might get a pullback. Let's see what price does. But right now, this is the NY move, NY open move. We've dropped about 182 pips. 5 minutes, 5.5 minutes for this candle to close. The next candle should break this low and continue down. And then I would be interested in seeing what happens at this area, this gray area that I've marked, because um, that's H1 support. So you see price ranging at it, closed above, closed back below, wicked, closed above, wicked, then closed back below. Then we have some sort of support form there right at 67.12, right? And then a push up. Then we came here, tested it, wicked down, then closed below, then again closed up, then tested, gone up, then tested, gone up, came tested, then closed below, came back, tested again, right? Its high is 673, 6.73. Yeah, so we tested it here. Once we tested it, then we broke through. Now let's see when price comes back to that area. That area aligns with our green zone as well. If price comes back there, let's see what it does. If it does. We are pushing up from that EMA. As I said, there could be a bit of a pullback from that EMA before we continue down further. We are reacting to that. See, on the M5 and the M1, there is an M5 price did grab liquidity. Yeah, but and there is no top wick on that candle, so maybe this is the move up to create the top wick and then continue down again. That's very possible. M1 is reacting to that EMA line, the slow EMA. Go up. This was the open of the candle, so we have no top wick, so price could push up here, come right there, create a little bit of top wick, and then continue down again. And then that high aligns exactly with this fib level, 2578.84. All right. So there is a reason for these fib levels being exactly where they are. I say this over and over and over again. There's a reason for these levels exactly where they are. This is not just random fib. This is not a fib this is not your default fib. It's not. You can see how price stopped exactly to the pip right there. It stopped. Now it pushed, came back to the EMAs, coming back to that fib level. Right. Now we can probably touch there and come further down. Because yeah, that's going to be taken out. Look at that. Touched it. Maybe come higher, create a top wick, and then continue down, or just now that it touched it, grab liquidity, now come down. But I don't trade. I don't trade these small moves. I'm not a scalper. I don't trade these small moves. When price touches these levels and comes down, that's a good 50 pip move. But it's not something that I would take. we touched it to the pip. 7884, drop 30 pips, 30 plus pips. Sorry, we could come down lower. And then break this low and continue low. Yeah, so we got about a minute for the hour close. So this is going to close most probably a strong bearish candle right at this area of interest, this green. So the next one might create a top wick, continue down. And then the next hour close is going to be the close of the 4-hour candle. The 4-hour candle has no top wick here. Got no top wick. So yeah, this area. I'm going to keep my eyes on this area here, right here. Okay, so that's the hour close, right? 30-minute closed very similarly with no top wick. The 4-hour has 13. Yeah, that's a 4-hour high. There's no top wick there. That has tested it, but no top wick. Hmm. 940, 326. What's that stop loss like? 15 pips. 18. Now we're going to break right through. We're going to come down. We're going to break this. Yeah. Get maybe a small reaction here, but we are going to break this. It's reacting to that top of that fib. Yeah, we're going to come down. First minute, second minute. Did react there. Right there, we did react. Pushing up. Yeah. And now we could go break, go create, go above that because that has no top wick, so price could continue up. Maybe that should have been a trade that I should have taken, been a part of. Here, 15 pips stop loss. It's moved 39 pips already, and we should continue up. Yeah, it just was waiting down a little lower. Anyway, let's wait. I'll wait. I want to see what price does if it comes a little deeper into this level. High 940, high 939. Yeah. 478. Yeah, if I placed a pending order here at 480, I wouldn't have got triggered. The spread wouldn't have activated my order, my pending order, because the low of the candle was 478, and my pending order would have gone at 480. That's just a 2 point. That's 2 points, just 2 points below the pending order, and that's not enough. It needs to go at least 0.5, 5 points below the pending order get activated. So it wouldn't have got activated anyway. But price should break this. I'm anticipating price to come further down, because I don't see this as a liquidity grab yet. I don't see this yet as a liquidity grab. That's a liquidity grab. That wick there is a liquidity grab. This isn't. Yeah, we are pushing up here. We are pushing up here. If a 5-minute candle closes above this, then we are continuing up. We might have this candle close bearish and the next 5-minute candle break above this high and continue up. We are pushing up. Yeah, it's unfortunate that price didn't come a little bit lower here. And then if it did come drop a bit to that line, I would have had a little more confidence in taking this trade, but we barely touched it. We moved about 50 pips. Yeah. We are pushing up. This is the pullback. This is the pullback that we were expecting. The pullback prior to NYSE. So this is the NY move. This is the pullback. And in 20 minutes is NYSE. So this is the pullback. And then it might be a continuation. We gotta see what price does. But we are above the image. Price has touched this, reacting to it. This is the pullback. This is the possible trade that I could have got in on, but it it did touch this line, but barely, just by 2 points. So this is the pullback, the pullback before NYSE. The move down, pullback. Now, is it a pullback or is it a reversal to continue the uptrend? It could be either. Yeah, missed that one. Happens very often, very, very often. 15 pips, 75 pips, missed it. It's a lot of volume. There's still a lot of volume. Today this is yesterday's spillover volume. Even tomorrow there might be a lot of volume. Yeah, look at these 15-minute candles. 102 pip candle, 60 pip candle, 80 pip candle so far. 4 minutes more for the candle to close. There's a lot of volume in New York session. Big candles. Yesterday's candles were huge. Right? Huge candles, 200 pip candles. So this is, yes, a spillover volume from yesterday. Yeah, that was the pullback trade. Let's go back up there. Maybe the daily closer is bullish, so we create daily support here. We've already got daily resistance there, so we create daily support there maybe. Maybe retest to 600, so 200 pips away. Possible, very possible today. We've got a lot of volume today. No. Two minutes more for this candle to close. If we do come here, I'll take a position here. If we do tap this level again, anticipating a move up, anticipating a further pullback. Stop loss will be under that. That's about 30 pips. It's about 30 pips. $580. $26.86. $418. Okay, let's see if price pulls back there. The idea is to, this M15 candle did reject the this green area that we had marked. A line came right up the EMAs because price is above it, so we are trading above it. Pulled back up there, so it did come and touch that and reacted to it. So the idea is that we should have got in here, but we missed that move. So if price does come to 76.33, then I look to take a trade there with a stop below that, which is about a 30 pip stop loss. It's a little high, but there is a lot of volume today. So, but we'll see if price gets there. There is a demand zone there, and there is a demand zone there. So one is there, and one is there, and yeah. See if we come there. If you come there, yes. If you don't, we don't. Okay, we are coming. Further down. I am going to manage risk using the M15 time frame. If price begins to break this low here, low 478. We didn't touch that. We just came close and we pushed up. We didn't touch it. We have a zone here though. Price should come to it. The next candle should come to it. Just gotta be patient. Just didn't touch it. Just oof. 1 point, 2 points, missed it by 2 points and pushed up 17 pips, 18 pips. Maybe go up now? I don't know. Let's see. Yeah, it's pushing up. 20 pips. Right from there, just didn't touch the line. Could come down though. Yeah, it could come down to this level. Should. This demand zone here. Yeah, but 607. There we go. Okay, that's first position. 33. We are going to manage risk here. Prices should come deeper. Yeah, I'm gonna manage risk because we've got 5 minutes to NYSE open and price could just continue down. So I'm gonna manage risk if we come below this, start to come below this M15 low. I'm gonna manage risk. Yeah, that low. That's the that's 478. That's where I've got that red line at 478. That's the M30 candle low. Okay. Okay, so that is on the second position, 20%, 20 pips, 25% of the position is closed automatically. The trade manager has closed it. Now we are on the second, on the first position is also, we've closed. So that's great. Now let's see if we continue to push up. Yeah, so now we will lose, if the trade turns against me, I will lose less than what I had intended because part of my positions have already closed in profit. So I will lose less, which is always a good thing, right? Yeah. So now we just wait to see what price does. If price does come here to this red line, maybe I will comes below this, I might close both my positions. Let's see how the M30 candle closes. Let's see how this candle closes. Got a minute and a half for this candle to close. Yeah, so if my stop loss gets hit, I will lose less than what I had planned. I had planned to lose about 15 bucks on this trade, and I'll lose less than that. I moved about 30 pips from the entry. That was the zone that price came and tapped because it hadn't tapped that zone, so it did come and tap in here, and it moved 30 pips. 30 seconds for the candle to close. Let's see how this M30 candle is going to close. 15 candle is also rejecting that area, but the next candle could always come down, so we got to see if this strong candle close strong bullish 5, then maybe the next candle breaks these highs and continues into this clean space right here. Yeah, we broke on the high. We need we have to push above these, we have to close above this to continue. We have to close above here. There is resistance here, so price has to close above here to continue. If it doesn't, then we're coming straight down. .30 minute closed somewhat a doji candle. almost like an inside bar. Yeah, the 30-minute closed like an inside bar candle. So price could go either way. It could break the low and go down, or break the high and go up. It's an inside bar candle. That's what you call an inside bar. It's the previous candle engulfs both the high and the low of the candle. So this candle is within its range. That's why it's called an inside bar. And so is the 15-minute candle. The 15-minute candle on the 15-minute time frame is also an inside bar of the previous candle. This candle, right? It's within the range of this candle, within the high and the low of the previous candle. So that's an inside bar candle. So when you have an inside bar candle, there's a 50% chance of price breaking the inside bar candle low and continuing down, or breaking the high and continuing up. There's a 50-50 chance. So it says nothing basically. So you got to now, since that's a possibility, this low is 530. This is another way that I can probably manage risk here. 530. Okay, that low is 530. So maybe if price comes to that, maybe I'll close the stop position. The first position, I maybe I close that. So this is the NYSE open. NYSE has just opened. So we had the NY pull, we had the NY push down. Now then we had a pull back. So this could be the NYSE push down. Just got to be careful. So if price begins to break this low, I'm going to manage risk at 257,530. I'm going to manage risk. I'm not going to hold on to this trade if you break this low. If you break the high, great. I'll hold it. We could continue up, but it's very likely to break this low. Very, very likely, because we have bearish candles closing. Yeah. A 5-minute candle has to close above this resistance here, above 2579 to continue up. Otherwise, we're not going up, we're coming down. 2579 there. A 5-minute candle has to close above this. 2579. I'm gonna to get here. I'm gonna close 82, 2582, 2582. I'm gonna close one of the positions here, and then we let the rest run if it can, if it has to. Close this one here. 7 pips away. Put our stops under here. 10 pips. So trade ran 55 pips. 25 pip stop loss, 55 pips. That was the area that I took it at. So the stop loss is a little bigger than I would like, but price did not come to the sniper because it already did come once, so didn't come there again. I'm going to bring my stop loss just under this candle. 74, 78, 74, 48, 74, 48, 74, 48. Yeah, 74, 48. So if that stop loss gets hit, it's under the 30-minute low, which is that. It's under that 30-minute low. Yeah, that low is 74.78. I've put it 3 pips below that. So if that stop loss gets hit, then this trade turns out into a break-even trade, because I would have taken a small loss, 1.7, and yeah, it becomes a break-even trade, which is fine. Price is rejecting that area. Yeah, we couldn't close. We couldn't close above it. We couldn't close above this resistance. We had a price pushed up, but we couldn't close above the resistance. We just closed right at it. So the next candle is pulling back. Dropped 45 pips. Yeah, we're gonna have to manage risk on this trade now. We broke the current M30 low. The candle broke its own low. So it's very likely price is going to continue to push down. So once it breaks this red, this here, there is no reason to hold this trade. Once you break it 257530, there is no reason to hold this trade because the M30 candle broke its own low. So we're going to continue down. Yeah, here we go. Yeah. Still got this position here. Let's see how what price does here. Okay, we got a 15-minute candle close. 4 is closing bearish, so yeah, I'm gonna close this trade. Yep. So that was a break-even trade. Price just came back. It's continuing down. This is the NYSE continuation down. This is a rejection here. Yeah, we are continuing down now. And now the next price is very likely gonna push down to this zone further down here. I still want to see if there is a reaction, price reacts to this support level. We got to wait now for the 4-hour candle to close. We've just got 13 minutes for the candle to close. We've got to wait for this candle to close. The next candle is very likely going to create a top wick and come down, push down further. This is it's going to probably push down right here, and then probably very likely come to 2550, very likely. So which case then we're going to have a bearish candle close today, daily bearish candle close today. But yeah, no opportunity for me to get in again, because that would be supply now. Once this candle closes in 12 minutes, if it closes like this in the next 12 minutes, that'll be supply. And it's unlikely the price is going to come all the way up another 160 pips before it goes down. Just probably pull back up here to these wicks here and then continue down somewhere there. And the top wick was going to be around 2580, 2581, and then continue down. Yeah. So once this 4-hour candle closes, I'm going to end the stream, because it's very unlikely that price is going to pull all the way up there in the next 30 minutes, because that's when my trading hours end. Well, next hour. I don't think price is going to pull up 200 pips back here to get me on trade. So in the next hour. So I'm going to end the session once the 4-hour candle closes, or just after the 4-hour candle closes. You got another nine minutes for that. Yeah, I would not take a trade here now. When it's 9 minutes to the candle close, 4-hour candle close, I wouldn't obviously be looking to take a trade. You got to wait for the 4-hour candle to close, and then maybe see if there's another opportunity. But there is not going to be another opportunity at the extremes, at least. This is the NYC push down. This was the pullback after the NY session, and this is the continuation down. So it's not a reversal, it's a continuation. So this is going to come all the way down here, and possibly all the way down to 2550, right? It's gonna move another 200 pips and come all the way down. Yeah, because this was the open. Where did price open? There. Okay. So this was the Asian low. Price moved 440 pips, 437 pips, and now it's coming all the way down. So we could easily. Where is the London? Okay. So that's the London low. We've just tapped. Yeah, we've just tapped and broken the London low. That was a London high. So the low and the high. So the high is respected during the Asian session. That's a London high right there. So if I were to just mark that, yeah, that's the high and that's the low, right? So in New York, we respected the high and we've broken below the low. So if we close below the London low, then we're going to continue down, very possibly to the Asian low next, and then all the way down to this demand zone, and then 2550 down here. Oh, that's a lot of liquidity. That's a lot of liquidity. Let's see how this candle closes and 5 candle closes. 15. So prices come exactly to this area that I mentioned, this range area here, this basing area. It's come right there now, back to that. So it's come on the H4. There's a lot of basing candles there. 1, 2, 3, 4, 5, 6, 7, 8. 8 4-hour basing candles. That's 32 hours. It's just 2 days. The candle just price just range for 2 days. And now we've come there. We've tapped that area again. Now price stayed above it. Can we continue to stay above this area? If we do stay above this area, we could pull back. Um, if we stay above it, then we could pull back. That's liquidity. 36 pips. That's liquidity. Nine eight four 944. So it's price grabbing liquidity. Hmm. Oh yeah, that's a liquidity grab. It is a liquidity grab. 655. See where this candle closes and how it closes. 695. It could close a lot higher, making the stop loss larger. 18, 23. A minute and a half, 1.5 minutes for this M15 candle to close and for the 4-hour candle to close. The 4-hour is rejecting that area. It is closing above it. For now, let's see where the candle closes. And the 1-hour is closing, might close a doji. 30-minute is also rejecting it. We broke below that inside bar, dropped 50 pips from that inside bar candle. Came deeper into this zone that we had marked. 15 minutes is about to close in a minute. Yeah, I might take a trade here, right here, if price comes there. 17, 18 pip stop loss. 695, that's the high. The low is 984, correct. 30 seconds for the candle to close. Price comes here. That's the stop loss. Now, yeah, we broke the high here. 92 high. 95, yeah, we broke the high. H4 rejected. H1 closed at doji. M30, nothing much. Similar to a doji. M15, rejection. M5, rejection. M1, strong move up. So let's see if we do come here. It's 42 pips, that's way too much. $37 pips. Yeah, that's 26. Okay, I'm willing to take it there. 20, 30. I'm willing to take one there. 70, 17, 25. Close. 72, 47. Okay. Yeah. I'm willing to take one there and one here. 62. Yeah. Willing to take a trade there and there. This is just too much of a stop loss for me. 42 pips. No. Even here, even that stop loss, 37 pips. That's just a little too much. So we're going to wait here. I'm going to wait at this candle here for the pullback, right? So this M15, the reason for this trade is this M15 is deep, has come deeper into this green zone that we had marked, very close to this support level. The H4 has rejected that area, close above this, right? The M30 has rejected the area. M15 has rejected. So on the M15, what happened was in the New York session, price pulled back, price pulled down, sorry, price pushed down, then pulled back. NYSE continued down, and now the 4-hour candle close, price may reject and reverse here. May, we don't know. So we're anticipating a trade from here, a buy trade from here. I'm anticipating a buy trade from here. So I've got my trade there. And the plan is to lose less than what I have risked, less than what I plan to lose, less than what I initially planned to lose. That's the hope. That's the hope. So here we've got supply. So price will react there. It will push up further, and then it will react there and come down. We do have supply there, and we have supply. So price has to close above this. Like I said, price has to close above this resistance to continue up. Otherwise, we're not going up. So let's see if we get a reaction here, come down, get us entry, get entry, and then we go up and then we go up. Let's see if that happens. But this is the new 4-hour candle open. Okay, so it's not created a bottom wick yet. There is no little or no bottom wick, so it needs a bit of a bottom wick. So price could come further down, deeper down, deep here, and then continue up. So we're going to wait for that. Yep. The 30-minute also has no wick. Yeah, 15-minute nothing. Yeah, it's gonna come down. It has to come down and create a bottom wick here, because this is a liquidity grab. So price, if this is the liquidity grab to go up, then this low should be respected. Price should not break this low. So price should come down within that candle, right? Come to the midpoint of that candle or to the sniper entry of that candle and then continue up. That's the whole point. This is the liquidity grab to continue up. Just like this candle was the liquidity grab to continue down. So from the candle close, price dropped 340 pips from this candle close, right? This was the liquidity grab, the wick to continue down, and price came to the sniper of that candle, right? So that's the exact thing we're expecting. Price has we're anticipating that this candle is similar to this candle, the liquidity grab to go up, and price has to come to the sniper or to the midpoint of the fib of that candle to continue up. So we wait. Wait. This is very possible. This is possibly this move down is to create a bottom wick. Possibly a bottom wick. This was the open of the candle. So this was the wick that we had. We just had like a 4 pip can up, 4 pip wick. Now we've got about a 12, 13 lower wick. We're coming down. Okay, I'm going to open one position there. Little higher than what I anticipated. I would have liked to get the entry a little lower, but let's see, price might come down. That's our second entry. If we come down, then There is no way to manage risk because that's just one M1 candle, so there is no place to manage risk. So we come down, we come straight down, we're going to hit our stop loss. Um, okay, so 25% of my position of the second order closed at 20 pips. We haven't come to this sniper yet. It's very likely price is going to come down here, come deeper into this area. Yeah, okay, so another from the first position, 25% of that position closed. So now if we hit our stop loss, we're losing less. I'm losing less than what I had initially planned to lose, right? Um, as I said, a 5-minute candle has to close above this resistance for price to continue higher. Um, let's see what price is probably going to come deeper. Yeah, we're coming down. Yeah, we're coming down. So there's no way to manage risk here. Oh, there is a 15-minute low here. 179. 179. 179. That's a 15-minute low right there. So we can manage risk here. If price breaks this low, we can manage risk. But I might hold it because I'm going to lose less. If price hits my full stop loss, I'm losing less than what I had initially planned to lose. And that's a save for me. 782578. 78. Open 2578. Yeah. So price could come here. Could come here. 2578. 2582. Yeah. So if we do come here, this open position is going to close here, and then I just have only that left. So if you do come here and then price reverses back, then we lose even less than what I had initially planned to lose, which is great. So yeah, because this is the first resistance level here. So if you look at the M15 time frame, if you look at the M30 time frame, you have that resistance there. If you look at the M15, there is resistance there. Price has already tapped it once, so we might break right through it. That's okay. I'm gonna be conservative with my TP levels. So we're gonna take out one position there, and then the other one may be here, 2582. 2582. Yeah, that's about 96 pips. Yeah. That's with those wicks, aligning with those wicks there, which is absolutely fine. I don't know if we're going to get there, but let's see. A 5-minute candle has to close above 2579 to continue up. We are 10 pips away from that TP level. So that TP is 50 pips basically. So stop loss was about 30 pips, 50 pips. That's okay, not bad. That's just about 1.5 hour, a little over 1.5 hour on that trade. And this one, if we go higher, then that'll be better. When this is the importance of managing risk. So if I didn't manage my risk and if I just let that trade run to whatever the TP was and let my full stop loss get hit, the previous trade wouldn't have been a break-even trade. The previous trade would have been a losing trade, a losing trade. Because the previous trade was a break-even trade, I was starting at zero. So my second chance I'm giving my trade. I'm giving my trade a second chance here, right? I'm giving the same setup. There's the same green area. I'm giving that. I have a liquidity wick here. I explained the trade perfectly. That was the M15 candle that I drove the fib on, right? So I'm giving this setup, this green box, a second chance. Now, I'm giving it from a zero loss level, right? Because the previous chance that I gave it, I was able to manage risk and get out at break even. Right? So now, if this trade turns against me and I go and it goes and hits my stop loss, I would have lost less than what I had planned to lose today. That's the key. So if I was planning to lose, let's say 1% or 0.7%, or 0.75% or whatever, it's going to be less than that. If I was planning to lose 1%, I might lose, let's say 0.7% or 0.6%, which is great, right? That's the game. That's the game. We are pushing up. We're just But 5 pips away there, we just almost got there, 2 pips away, and then we kind of rejected that area. Price has tapped it before, so we should hit it. Price has trade gone above it, went above it. Yeah, we should hit it. Ooh, almost, 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 almost. Almost. Oh my goodness. Just by a point. By 5 points. 4 points. Let's see. Be a shame if price reverses all the way down now. But it could happen because we did reject here before and it did come down. So, all right, we hit our TP. We hit the first trade is out. Okay. Now we've got the second trade running, and that's running at 56 pips right now. We're going to hold that to our second TP, which is there, almost 100 pips, right, on that trade. If you get that, that's about 97 pips on that trade. It was from this demand zone, so drop and almost a basin candle, and then the rally up. So price came right there, tapped it. That's where I like to take my trades. That's the ideal trade for me. That's the ideal stop loss. 24 pip stop loss, great. Potential 100 pips, great, excellent. That that kind of trading makes sense to me, right? So that kind of trading makes sense to me. So this is the 15-minute. That's how I drew the fib here. Okay. As I said, a 5-minute candle needs to close above 2579. If a 5-minute candle closes above 2579, then we can continue higher. But it needs to close above 2579. So yeah, so that was the candle that I was expecting price to come to. It did come to that candle. It didn't come all the way to the sniper entry. It didn't come there. He missed it by 1.6 pips, and that is why I got in a little higher. I got in at that zone there because I was not sure if it was. Sometimes it does come, sometimes it doesn't. I don't know when it would and when it wouldn't, but I split my entries and take one there, then I take one at the demand zone. So that was the demand zone. Took it right at the demand zone. So that was a 25 pip stop loss. And I'm anticipating 100 pips on this trade. Um, yeah, anticipating 100 pips on this trade. Um, let's see if this M30 candle closes above. We can go back to that. And the reason my TP is there is because you can see the rejection there. Price rejected at 2582. That is also 2582 is the daily SR level that I had mentioned right at the beginning. This is the daily SR level here, open 2582, right? That is daily resistance. So that's a good place, 2581, 2582, 2580. Any one of those areas is a good place to take majority of your position out because we don't know price rejected it earlier. Price created support there, then rejected it here. If you look to the left, you will see price rejected it here, 2582. Rejected, closed above, closed below, closed above, closed below, closed below, right? And now we're coming there. So we don't know if price is going to close above or if it rejects it and then closes below and continues down again. We don't know that, right? So that's a good area. 2581, 2582 is a good area to your TP. The reason I've got your 2582 is because I've already, this is almost a risk-free trade now. Okay, at 76 pips, yeah. So what I'm going to do now, um, here's what I'm going to do. Here's how we make this a completely risk-free trade. Um, I'm going to close the pending order here, okay, because I don't believe price is going to come back down there. And I'm going to put the I'm going to put my stop loss under this candle, right? Under this M30 candle, which is going to close in 3 minutes. So if price is to continue up, there is no reason for price to break this low, right? If the next candle breaks this M30 high, there is no reason for it to come back and break this M30 low if it's going to continue up. There's no reason for that, right? So the stop is going to go under this candle, 71.79. So 71.79. Let's just put it about 3 pips below 49. Okay, so my stop loss is just 8 pips below the entry, and that's how I've made this now a risk-free trade, right? So either it hits here, my TP, or it comes down and hits my stop loss. I'm okay with either scenarios. Okay. So we had to wait today because price did not come to the area that we wanted, did not come to this red area again. It did not come a second time. Usually doesn't. Once it's tapped H4 supply, there's no reason for it to come back again. As I said, I wouldn't have taken this trade even if it did in New York session because the stop loss was above 50 pips and I wouldn't have taken that trade. Then we had to wait patiently for price to come. It came in here. We tried to getting on a trade here. That trade we managed risk and we made that a break-even trade, which was great. That's a win right there. Even if I didn't take this winning trade, that would have been a win there because that losing trade turned into a break-even trade, which was absolutely fantastic, right? So now we've got a winning trade here. Stops are almost at break-even, and we're going to let this run to about 100 pip TP, almost about 97 pip TP. Right? We're going to let it run. Also, what this WANA has been respected, so we can expect price to break this high. But I'm going to keep my TP there. Yeah, I'm going to keep my TP there. So this 5-minute needs to close above this. If this 5-minute candle closes above this resistance, then we're going up. It has to close above this. Right, and we are about 14 pips away. 30 seconds for the candle to close. So we close above this resistance. I said this several times in the last 30 minutes. If we need a 5-minute candle to close above here, for price to continue here and further and further. Right? A 5-minute candle has to close above this resistance. This is how you read price. This is how you read candles. Sorry, this is how you read candles. You got to read candles at the right areas, not everywhere on your chart. You got to have the knowledge. You got to have knowledge of reading candles, but it's got to be used in the right area, in the right places of a chart, not just anywhere, not reading candles wherever they happen, but at key levels. So this is a key area that we had marked prior to New York Open. We marked this green spot, right? We marked this green box here before New York Open, and price is doing exactly what we anticipated it would do. Come here, collect liquidity, and go back up, right? And that's exactly what's happening. Yeah, we are just about to hit our TP. And we did. We hit our TP. 1 minute candle, boom, straight through. So great. We got 0.86% today. That's a good rate. That's a good daily gain rate for me. 0.86 is fantastic. With very low risk. I would have risked about 0.5% to make almost double that, or probably less than 0.5% to make 0.86%, maybe about 0.4 0. About 0.4% to make 0.86%, which is great, right? That's the risk that I'm comfortable with. Now, for somebody else, risking 0.4, 0.5% on trade might be, it might they might have a higher risk tolerance. So they might say, no, I'm going to risk 2% on a trade, 3% on a trade. That's fine. If you can manage risk, if you're comfortable with taking a 1%, 2%, 3% loss, that's absolutely fine, right? You should do that. But I I risk about 1% or less, and I don't want the market to take that 1%. So I manage risk and I try to lose less than that. And then when I do get a gain, then my wins always turn out bigger than my losses because I manage risk. And also because of how my trade plan is set up, right? So my trade plan, the setups that I take, um, they by design, they are there are 2 RR trades or 3 RR trades by design, right? So because of that, if I do have a loss, it's very easy with the next win to recover that loss. That's the whole point of the way I trade and the system that I trade. So all of this is a way, this what I do. I'm doing it live. You guys can learn it. You don't need any indicator for this. It's done on a naked chart. If you do need this trade manager, if you do need this indicator, the links are below the video. You can go look for it on MQL5 and rent it out. But you don't need it. If you don't need it, you can just trade, without it, right? If you were taking the buy or sell signals of the indicator, this would be a buy signal. This would be a buy signal. I'll show it to you right here. Um, go put that true, close. Okay. This one, no, because we didn't, this was above, it didn't touch the, ideally you want to see price come and touch the zone and then go down. But even if you did take it, you would have needed to manage risk on this candle, maybe close 50% when price started to come down here. And then you lose less than what you risked, and then you take this signal, right? So so now this signal is the ideal signal. This is going here. It's going to go touch this 2584. Okay, it's going to go touch 2584, and then maybe even and maybe the next point is somewhere here. We go to 2588, somewhere 2588, right? So 25884 and then 25888, another 40 pips above that. And then we may continue up. I don't know. We may continue up, but I got out here because there is a rejection there. There's a previous support level there. There's a daily SR level there. For all those reasons, I got out at around 100 pips on that trade. I got out of it because I didn't want to hold it. But price may continue higher. We've got a supply zone there, so price may continue right up to about here, very very easily. It could continue another 50, 60 pips. Okay, but right, that's it for today. Um, yeah. So for the purposes of these live sessions, I'm not using the buy or sell signals. I'm trying to show you guys a way how to trade on a naked chart without any indicators. Just by doing the right analysis, drawing the right zones, drawing them correctly. That's the whole point. Drawing the zones correctly. That's the key. Draw the zones correctly, and wait patiently for price to come to your zone before you take a trade. Don't just jump in. So like I said at the beginning, I was not willing to trade in this space. There was a 200 pip space here from this red box, uh, from this red box all the way here, 200 pips. I said at the beginning, I'm not willing to take a trade anywhere inside that. I'm not going to. And I didn't. I waited for price to either come up here or come down here, and it did come down here, and I did get a trade, and that's the trade that I took, right? Okay, so that's the end of the session. I hope this was useful. I'll continue to do these sessions so that this is free education and value that I add. I'm hoping that it'll be useful for at least one person. And if I can help one person, then I've done my job. If I can just help one. All right. See you guys tomorrow.